Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. In today's video we are looking at Qualcomm, but before we do look at this business, first I want to show you very quickly where we are with my portfolio overall. As you can see, at some point yesterday we crossed £45,000, but then today happened and it's slightly down right now, about £500 or so. So yeah, that is just generally a quick overview. Again, it's going up, it's going down, and just usual things. Okay, yesterday was all green, everything was green yesterday. So if you look at for the week, I think it was still in the red. Okay, apart from the energy companies and a couple of healthcare businesses, majority of the stocks are still down. Broadcom still up for a little bit. And then the other thing I want to show you is not that thing, this one here. Okay, and this is the Fear and Greed Index, which takes into consideration the volatility in the market and so on. This is run by CNN Business. And as you can see right now, people are extremely fear. Okay, extremely fear because there's everything else that's happening right now in the market, where there's inflation numbers coming up. Today I think it was like the US is about 7.9 or whatever it was today, and you've also got you've got inflation going on, your interest rate coming up soon, the hike of interest rates, as well as what's happening in Russia and Ukraine. All of that put together, everyone is fearful. Okay, maybe a couple of years ago this was extremely greed, everybody was buying stocks, everyone was happy with it, everyone was basically every single day all you saw was just green and people thought they were untouchable. But right now things are not heading the right direction, and again people are fearful, people are selling it. Okay, so extreme fear basically, and this is what Warren Buffett said. He said, be fearful when others are greedy, and greedy when others are fearful. And that is what I have been doing. I've been buying more stocks in the last few weeks. You saw my last portfolio update, spent over £4,000 while the markets will keep going down, and I'm going to continue doing that, obviously, because that's, some of the companies that I've actually added to, I'm sure they will bounce back sooner or later. Even if they're in the red now, about 2-3%, 10%, 15%, whatever it is, it doesn't matter. I'm sure sooner or later they will bounce back, because remember I'm trying to buy blue chip companies that are absolutely amazing. So yeah, so that's just to your overall market, so I wouldn't worry too much about it. Basically I haven't added anything else to it this week, other than just the usual weekly buys. But yeah, that's generally a quick update of the markets and my portfolio. So let's start the video and start looking at Qualcomm. Qualcomm develops and licenses wireless technology and designs chips for smartphones. That's what they've been doing in the last God knows how many years. One of their biggest customers were Apple. Recently they started diversifying that, and I'll share that with you in a second. So before we look at the financials, I just want to show you their latest earnings. So this was released in just this quarter, and as you can see, they made so the first quarter of fiscal is basically they made $10.7 billion in revenue. That's up 30% this time, year on year, and they have EPS almost $3 in EPS on GAAP and EPS, and non-GAAP EPS of $3.23. These are the three segments that they're looking at. So they have loads of different segments, but the main ones are the QCT and QTL, and both of them, as you can see, they are up. So this one is up almost a 60% year on year on EBITDA, and then you've got also the same thing here at 77%. So the margins really look good, amazing. Okay, and obviously this is not a small cap business. Okay, let me quickly show you how big this business is, and as you can see here is $170 billion business. So they're not a very small company, they're a huge company, one of the biggest in the semiconductor. And now one of the things I actually liked when I read this through last time when it came out, it was the fact that they now diversified, and Android is now, the revenue from Android is growing about 25% year on year. That's amazing. Okay, and they have well-known products. They now diversified, so instead of relying on just Microsoft, not Microsoft, Apple, they are now relying on other big companies as well. So including companies that are using the Android platforms, okay, which is amazing. Okay, so they are diversifying their portfolio. And as you can see here, from mobile phones, from basically different technologies, the RFIDs and so on, automotives and Internet of Things, these are basically the future. This is basically where, so the companies like Teslas and whatever is probably using their products, companies that are making anything to do with networking and so on. Okay, so as you can see here, with modem to antenna solutions across automotive and the Internet of Things. So every single sector is growing, is heading in the right directions, is absolutely great business. There's a lot in here. Okay, so if you're interested in you want to have a look deep dive of what's going on in the business, then you can look at their latest earnings. It's always nicer to look at, and what they do for you is basically they compare it with the last year's revenue, this time last year, the last quarter, so this time last year. So again, as you can see, is heading all in the right directions, which is what you want to see. And year on year, everything is growing, and that's absolutely music to my ears. Absolutely brilliant. Right, now we're going to look at the fundamentals. So let's have a look at the general. So I'll put all of that together in one place so you can see it for yourself. So as you can see, the company is currently trading $151 per share. It has PE of 17 PE. Can you imagine that? It always had a lower PE, and I've been buying this when it was like almost to 14, 15, and it's gone up since then. And I'll share that with you in a second. But as you can see, the sector is about 30. Okay, you've got EPS of $8.73. That's per year. Market cap of 182, 170, something, whatever it is right now. Economic mode is narrow, but I think Morningstar, this comes from Morningstar. I think Morningstar should change this, because this company has a lot of patents. Okay, there's so many companies that are using their patents, and they have to pay for that. So in terms of 3G, 4G, 5G, and other technologies, they have so many different patents. I can't even list them here. So I think this is wrong, but either way, it's a narrow moat. Annual dividend yield of 1.68, which is great. 5-year growth rate of 6%. Dividend growth streak of 18 years. So they have increased their dividends of over 18 years. Payout ratio only 28%, which is really good. And then dividend safety of 80%. And then you've got free cash flow here, $7.4 billion. This is money that you can use to obviously pay back shares, buy back shares, pay you dividends, purchase other companies, spend a little bit of money on research and development, whatever the case might be. That's the money they can use. It's slightly volatile, so above 1, current ratio above 1, which is good. So that means they can cover their debt in the next 12 months. Profit margin of 28%, return on equity of 107%. And then when you look at the quarterly revenue growth, year on year, 30%, and then another 39% on when it comes to earnings growth year on year. And then growth estimated for the next 5 years, about 15%. So what that means, the earnings should be growing about 15% every single year on average. And that's absolutely brilliant. Valuation from simply Wall Street is 31%, almost 32%, and undervalued at the moment. Target price of $237 per share. Right now, if you look at it, is $141 per share. Okay, and not $151 per share. For me, it's definitely a buy. Currently, fair valued is, according to Morningstar, is 163, so it's still fairly valued, and basically under the fair valued here. And then right now, tip ranks, according to them, is 33%. It has a 35% upside, and the price is $219 per share. So there's not much to say about this company. It's a really great company in the right industry. It's the tech side of things. It's growing their business. They don't have economic moat that I'd like. It's not like wide moat, but I do believe with the patent, it definitely helps. It's really undervalued at the moment. Okay, I am slightly up, so I'm a little bit concerned about averaging up, with considering there's so many stocks that are on sale right now. So I'm up 13%, and the decision I have to make is, do I average it up on a great company like this, or do I average down on some of the stocks that I own that are undervalued and down quite a bit at the moment? So KLA, for example, is one of the stocks that I've added to recently, and we talked about it in the last video. I'll share the link if you would like to watch that. And I bought one share since then, and as you can see, it's still down about 7%. So I'd rather add to KLA on average it down instead of averaging up on Qualcomm. Although I absolutely love Qualcomm, I do think I will see this stock under 135, maybe 130. I don't know. We'll see what happens. But the way things are going, the volatility, I would not be surprised if it goes below 130 in the next couple of weeks or months. And if that happens, then definitely I can add more. I've always said I want to add this maybe another 7 shares or so. My average price is 135, so 135, but as you can see right now it's 151, so I would be averaging up quite a bit because I'm up already 14%. So that's the only reason I probably wouldn't add to it right now, but it's a great company. I absolutely love the business model. I love everything about this company. I've been buying it since God knows when. I've never sold a share. I've always been bullish on this company. Like I get dividends, so you can see I get about £5.65 for owning those 13 shares. That's every quarter. Okay, and I have been purchasing this since 2020. So my first half a share I bought it for £45, and at the time, as you can see, it was $112 per share. And I started talking about it in my channel a long time ago, and I've done quite a bit of videos about this stock, and I've always talked about the fact that I was buying more, the fact that it was undervalued. Okay, as you can see, over a period of time I've been buying this since God knows what. Anyway, so yeah, that is the Qualcomm. I hope you enjoyed the video. If you like this kind of content and you are enjoying being here with me, just like the videos, please. That's all I ask. It takes a lot of time, and to put this together, to actually go to loads of different websites, okay, to put it together, it's actually quite time consuming at times, but I don't mind. I really do enjoy doing this. So I hope you enjoy the videos, and if you get any value out of it, then just please give it a like and subscribe to the channel, share with your family and friends. All I want to do is share my journey, and again, I'm not a financial advisor. All of these things I'm telling you comes from the actual financial world, but I'm not giving you advice. It's just to kind of show you what I think about this product and this company. I hope you enjoyed the video. Take care. Assalamu Alaikum.